Another week and another commodity skyrockets to all-time record highs. That's one of the most lucrative trends of the current commodity supercycle that we find ourselves in right now. Since the start of 2021, everyone from Goldman Sachs to JP Morgan to Bank of America, they have called this the beginning of the new supercycle and hot listed commodities as their preferred asset class over the next decade. Fast forward 4 years on, and it goes without saying the commodity supercycle shows no signs of slowing anytime soon. This has sent a long list of commodities skyrocketing, with many notching up impressive double to triple digit gains already within the first quarter of this year. So far this month, we have seen cocoa prices, they've surged to their highest level in 50 years, racking up double-digit gains on a consecutive weekly basis. Last week, cocoa prices, they soared over 25% to reach their new all-time record high of $8,900 per tonne. That uptick in prices continued on Monday, with cocoa breaching new historic highs of $9,000 per tonne. Cocoa prices, they're now up 125% from their opening price of $4,000 per tonne since the start of the year. They've more than doubled in the short space of 2.5 months. But more impressively, cocoa prices, they've now tallied up a staggering gain of over 260% from this time last year, when prices were trading at $2,495 per tonne. Elsewhere in the commodity markets, uranium's third bull market is off to a red-hot start in 2024, with spot prices rocketing above $160 per pound to hit their highest level in 17 years. That's more than a 100% increase from their 2023 low. It's also a whopping gain of over 350% from their 2020 low. But there's one commodity that's whipping up an explosive money-making storm, and that is gold. Last Wednesday, a seemingly ordinary day for the markets, that turned into an extraordinary day after Federal Reserve officials, they confirmed their outlook for 3 interest rate cuts this year, which sent gold prices surging to all new time record highs of $2,222 per ounce. Gold prices, they've now flipped into supersonic mode, blasting through a new all-time record high for the third consecutive month on comments from Fed Chair Jerome Powell, signaling that while underlying inflation will come in slightly hotter than expected this year, this will not dissuade the committee from lowering interest rates from their current 23-year high. The FOMC's latest statement, that leaves the central bank on course to begin cutting rates as early as the summer. Interestingly, the Gold and Silver Club has routinely been quoted in the media since the beginning of the year, saying the Fed is ready to move and will deliver 75 basis points of rate cuts starting in June. That forecast is looking firmly on track to play out exactly as predicted. There's no denying that gold's record-breaking rally, that has been nothing short of impressive. Never before in history have we seen the precious metal score multiple all-time record highs in such a short space of time. So far this month, gold prices, they've breached $2,159 per ounce, $2,180 per ounce, and $2,222 per ounce, scoring 3 back-to-back all-time record highs within the last 2 weeks alone. And this could just be the beginning. Mounting evidence shows that we are now in a new era for the precious metal, or as Wall Street powerful institutions are calling it, the beginning of a new historic supercycle for gold. If history is anything to go by, then by the time this current supercycle is over, we could see commodity prices not only reach new historic highs, but soar way beyond them. Citadel, which is one of the world's largest commodity trading firms, they have just reported they made more than $4 billion of profit on commodities, and we're only in March. In fact, everything that's currently happening on the global macro front shows that 2024 is officially on track to be the Gold and Silver Club's biggest and most profitable year ever in our 14-year history, and we're only just getting started. Our clients have already made in excess of 6, 7, and 8-figure returns so far this year, and we're only in March. It's times like these that make millionaires and billionaires out of regular people. The majority of our clients at the Gold and Silver Club, they've already made more money in the last 3 months than they made in the entire 12 months of last year, and there's still a lot more upside potential to come. Extraordinary times, they do create extraordinary opportunities, and right now, as traders, we are living in some of the most exciting and rewarding times ever in history. Whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second replacement income, or just to earn a better return on your savings, now is the time to take action. Right now, you have an opportunity to make 2024 your biggest and best year yet, which, based on our research, it's going to be another blockbuster year due to all the current macroeconomic events that are currently unfolding. Definitely do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which we've been transparently documenting through our weekly videos. If you're trading at one lot, that's $100,000, or if you're trading at 10 lots, that's $1 million. As you can see from our testimonials, the majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figure returns, and we're only in March. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, and you still want to make 2024 your biggest and best yet, then go to jointhegoldandsilverclub.com now to learn how our mentorship program can take your trading to the next level. Time is the most valuable commodity that we have. Make sure that you don't waste it. So with that, let's move over to the charts. We'll talk you through what we're looking at here as we go into next week. So first of all, we've got to start off with platinum. It's currently breaking out on Monday. It's up over 1%. It's trading just below 920 US dollars per ounce. So if you go back and watch any of our videos last week, we were talking you through a big buy opportunity here on platinum, sub 900 US dollars per ounce. So already that's up over 200 points. We continue to stack and layer additional positions on that pullback that we saw last week. The price of platinum broke down to 890 US dollars per ounce. So plenty of time at the beginning of last week through to the middle of last week ahead of the FOMC statement, and even on Friday to top up this position and get exposure to platinum here. In fact, it's just right now breaking above 920 US dollars per ounce. So we're actually not that far away already where we can start scaling out of some profit on this market. It's been such a fast return just from Friday through to Monday so far with the breakout that we're seeing at the moment. So again, well done to everybody who capitalized on platinum. That's been a very fast opportunity. Then moving over to palladium, as you would imagine, platinum and palladium, they are significantly correlated. And with that, we're also seeing palladium up over 3% at the moment at the start of the week, reclaiming back above 1,000 US dollars per ounce. So of course, we've also got exposure on palladium here. There were loads of opportunities over the month of February and into the beginning of March to add to this position. Platinum and palladium prices over February, they actually reached parity with each other when they both broke below $900 per ounce. Since then, we've seen some impressive moves to the upside. We had actually over a 10% day here into the middle of March. However, we did get the usual selling pressure last week after the FOMC statement, and that was nothing more than another big buy opportunity. Now, as with gold, you know our status here. We continue to maintain our long positions from under 2,000 US dollars per ounce. So 5 trades on at the moment with gold, and essentially we'll stay long here. I have increased the profit target not once, but twice on this market. So we're targeting above the all-time record highs here on gold. Now, what we could see a little bit of this week, due to the fact that it's the end of the quarter, then we move into the Easter break, we might well see a little bit of profit taking for the end of the quarter, rebalancing of portfolios and the potential for some outflows. However, so far, gold is holding up very well. So anyone who really missed out on this opportunity on gold, plenty of opportunities there over February to stack into the trade. They're only really seeing very shallow retracements at the moment, and gold's not really providing much of an in for those who've missed out on the trade. And subsequently, what we're seeing instead is a lot of hedge funds and money managers, they're FOMOing in much later into the move here. They've been unable to catch the lows, and we've now at over 85% of hedge funds and money managers have flipped long into this market. So they've bought it much, much higher than certainly we have with our clients at the Gold and Silver Club. They've been buying it above 2,150 US dollars per ounce. It's not to say it can't go higher from here. In fact, I'd rather it did go higher, than we can continue to scale out of further profits, but it would make sense here to see some end of quarter profit taking later on in the week as well, particularly as hedge funds are FOMO'd in right at the end of the month here. Then again, moving over to silver as well. So as you know, we stacked into multiple positions on silver. The low for that was actually Valentine's Day in the middle of February. Since then, we've seen over 300-point breakout to the upside. Silver, it's been a really strong mover over this month. It's starting to catch up to some of the price action with gold. Obviously, gold has broken out to all-time record highs 3 times over March so far. So it wouldn't surprise me to see further acceleration to the upside here for silver if gold continues to get this bid. If we have a look at silver right now, it's consolidating just under 25 US dollars per ounce. We remain long all of our positions on silver. We do continue to scale out partial profits on the breakouts that we see to the upside. Essentially, I'll stay long. I'm not going to be buying or adding to the position at this zone. We don't need to, but if we do get a break back above the swing highs, targeting the highs from December here, yes, I would be interested to then scale out of further profits, banking into strength. With gold as well, as we talked you through last week, now actually on the data going into this week, we've seen 90% of hedge funds and money managers have now flipped long on oil. Now, the challenge we have with that is that this same scenario happened as well in September when oil was breaking above $90 per barrel, and subsequently oil got rugged after that when most of the hedge funds and money managers, they bought in much later into the move, and then they essentially got liquidated because oil then went on to break down over September, October, November until we formed the lows in December, which is in fact where we started building out the majority of our positions. As you know, we've got multiple trades in this market. All of those positions are in fact protected. Where we are at the moment on Monday, again, it wouldn't surprise me between now and the end of the week to see some profit taking. The main challenge I have is hedge funds and money managers, same on gold. They've FOMO'd in much later, right? So they've bought in late, they haven't bought in early, they haven't bought at the lows. Instead, they've used trend trading systems to buy this market much later. And now we're starting to see a little bit of pressure as we go towards the last week of March here in the lead up to Easter here. So it would make sense on rebalancing your portfolios and just natural profit taking to see some outflows between now and the end of the week. Now, we are set up on the buy side. So if it does break out, breaks back towards the swing highs, starts climbing above $83 per barrel, we will benefit from that, but it wouldn't be a big surprise to see a pullback on this market. Obviously, if it pulled back down towards the price swing lows, I'd be very interested in adding further exposure here to crude oil. And of course, whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second replacement income, or just to earn a better return on your savings, then now is the time to take action, to give yourself the gift of a better 2024. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional research-driven trading approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a massive gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional research-driven trading approach. Or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis, outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already stacked up massively against you. If you want to change your results, then you have to change your thinking. If you want to learn our exclusive research-driven trading approach that is never taught to retail traders, only reserved for professional traders in the banks, the hedge funds with access to powerful game-changing insights, including where the banks and hedge funds where they're buying and selling in real time, alongside the key liquidity zones, so you can enter and exit the markets with pinpoint precision, alongside learning the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycle for each commodity alongside the intermarket correlations, then you need to join our mentorship program. As we head into the new year, we are in one of the greatest eras of wealth creation the world has seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, there's no better time than now. If you want to upgrade your income, then you have to upgrade your skills. Never underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now, with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will get in touch ASAP.